If you have $20,000 in cash sitting in your bank account, in your home, in a safe, or in a safety deposit box right now in April 2026, that money could get your bank account flagged, trigger a government report, and potentially interrupt your CPP, your OAS, or your GIS, even if you have done absolutely nothing wrong. That is not a warning designed to frighten you. That is the new legal reality in Canada, following a law that received almost no mainstream media attention, despite affecting every Canadian who holds a bank account. On March 26, 2026, just 1 month ago, the federal government signed Bill C-12 into law, rewriting Canada's anti-money laundering rules from the ground up. The consequences for everyday Canadians, and especially seniors on fixed incomes, are significant and immediate. Stay with me, because by the end of this, you will know the exact 2026 rules, the confirmed April 2026 benefit amounts for CPP, OAS, and GIS, and the precise steps to protect yourself and every dollar you have worked so hard to save. The law that changed everything. Bill C-12. Most of the headlines around Bill C-12 focused on its immigration provisions. But buried deep inside this omnibus legislation is a sweeping rewrite of Canada's Proceeds of Crime, Money Laundering, and Terrorist Financing Act, the law that governs how banks must monitor and report your cash transactions. Here is what changed in plain language and why it matters to you personally. First, the financial penalties for banks that fail to properly report suspicious transactions have been dramatically increased. Under the previous rules, the largest fine ever imposed on a Canadian bank by FINTRAC was under $10 million. Under the new rules, effective March 26, 2026, a single prescribed violation can result in a fine of up to $4 million for an individual and up to $20 million for a business. Stack multiple violations together, and the cap rises to $20 million or 3% of a bank's total global revenue, whichever is higher. For Canada's largest banks, that could mean penalties reaching into the billions. What this means for you is straightforward. Your bank is now under more pressure than at any previous point in Canadian history to flag anything that looks unusual. Their compliance software has been upgraded, their staff retrained, and the cost of failing to report something suspicious has never been higher. They will err on the side of caution every single time. Second, all financial institutions in Canada, banks, credit unions, insurance companies, mortgage brokers, must now formally enroll with FINTRAC and renew that enrollment on a regular basis. FINTRAC's oversight reach has never been broader or more enforceable. Third, the new law is laying the groundwork for restrictions on cash payments of $10,000 or more at businesses and charities, and banks are moving toward prohibiting third-party cash deposits, meaning someone depositing cash into your account on your behalf. The specific regulations are still being finalized, but the direction is unmistakably clear. This is not the government targeting seniors. This is a system that has become significantly more sensitive, more automated, and more aggressive than it has ever been before. And as a Canadian senior receiving CPP, OAS, or GIS, you need to understand how to navigate it safely. The $10,000 rule and the dangerous misconception around it. This rule has existed for years, but the consequences for banks that fail to follow it have multiplied. Under Canadian law, any single cash transaction of $10,000 or more must be automatically reported by your bank to FINTRAC within 15 calendar days. This is called a large cash transaction report. Your bank does not need to warn you. They do not need your permission. The report is filed automatically every time, with no exceptions. Here is where many Canadians, including many seniors, make a dangerous mistake. They believe they can avoid this reporting by keeping their transactions just under $10,000, withdrawing $9,500, depositing $9,800, staying under the limit. That assumption is very wrong, and it can have serious legal consequences. Deliberately breaking up transactions to avoid the $10,000 reporting threshold is called structuring, and it is a criminal offense under Canadian law. Even if every dollar involved is completely legitimate, earned from your pension over decades of honest work, structuring is illegal. Full stop. There is also a 24-hour aggregation rule that must be understood. If you make 2 or more separate cash transactions that together total $10,000 or more within a single 24-hour period, the bank treats all of those transactions as one large transaction and files a report automatically. 2 deposits of $5,500 within the same day equal $11,000 in FINTRAC's system and get reported without discretion. Under the new 2026 rules, banks are also moving toward prohibiting third-party cash deposits entirely. If a family member tries to deposit cash into your account at a branch on your behalf, the bank may refuse outright, and the attempt itself may be flagged. What actually happens? If you have $20,000 in cash, right now. Holding cash is not illegal in Canada. There is no law that prevents you from having $20,000 or $50,000 or $100,000 in physical Canadian currency in your home, in a safe or in a safety deposit box. You are allowed to save. You are allowed to hold cash. But the moment you try to deposit a large amount of cash into a bank in 2026, you will face scrutiny. And given the new enforcement environment under Bill C-12, that scrutiny is now backed by penalties so severe that no bank will take chances with an unexplained large cash deposit. Here is how it plays out for a typical Canadian senior. Consider someone receiving average CPP of $925.35 per month and OAS of $743.05, just over $1,668 per month from the federal government. Now suppose that person has been setting aside a couple of $100 each month from their pension over 2 years and has accumulated approximately $20,000 in cash at home. They decide it is time to deposit it. They walk into their bank branch with $20,000 in cash. The teller looks at the account history, a steady $1,668 monthly direct deposit from Service Canada, modest monthly expenses, no significant prior cash activity, and suddenly there is a $20,000 cash deposit on the counter. This is a massive anomaly in that account's financial profile. Under the new 2026 rules, the teller has no choice but to escalate it immediately. A report to FINTRAC is filed. The account may be placed on hold for review. None of this means the account holder is being accused of anything. None of this means anything wrong was done. But the disruption, the delayed access to funds, the paperwork, the compliance review, the anxiety, is completely real. For a senior depending on those funds to pay rent, buy medication, or cover living expenses, a 2-week hold is not a minor inconvenience. It is a genuine financial hardship. 3 real situations Canadian seniors are facing right now. The first involves a 71-year-old retired woman from London, Ontario, who receives CPP of $140 per month and full OAS of $743.05. She does not qualify for GIS because a small workplace pension pushes her income just over the threshold. Over 3 years, she had been setting aside $300 to $400 per month in cash, money she was saving to give her 3 grandchildren as graduation gifts. By March 2026, she had accumulated $14,000 in a tin box in her closet. When her eldest granddaughter graduated in April, she went to her bank on a Tuesday morning and presented the $14,000 in cash for deposit. The teller called the branch manager immediately. Her account was flagged under FINTRAC's large cash transaction requirements and placed on a temporary hold. She was sent a letter asking her to explain the source of the funds within 7 business days. She had no paper trail, no receipts, no organized withdrawal records, no written log of how she had saved that money over 3 years. After 4 stressful days of gathering statements and speaking with a compliance officer by phone, the hold was lifted after 9 business days. She had done absolutely nothing wrong. Her only reflection afterward: if someone had told her to keep a simple notebook, she would have saved herself weeks of anxiety. Nobody warned her. The second situation involves a 77-year-old man receiving full OAS at the enhanced rate of $817.36, CPP of approximately $860, and GIS of $890 per month, a total monthly federal income of approximately $2,567. When his wife passed away in January 2026, he inherited $28,000 from a credit union account she had maintained separately. After the estate was settled in March, he transferred the funds into his main account. Because it was a bank-to-bank transfer, no large cash transaction report was required. But because the amount was unusual for his account profile, the credit union filed a suspicious transaction report voluntarily. He received a call from his bank's compliance department asking about the transaction. Because he had his wife's will, the estate certificate, and a letter from the estate lawyer all organized in a folder, on the specific advice of his lawyer, the review was completed in 3 business days. His account was never frozen. His CPP, OAS, and GIS continued without interruption. His conclusion: keep every piece of paper. Those documents were worth more to him in that moment than anything else in that folder. The third involves a 69-year-old woman in Saskatoon receiving CPP of $730, full OAS of $743.05, and GIS of approximately $1,500 per month, a combined federal income of just over $2,500, enough to cover rent, groceries, and basic medications. In February 2026, she received a phone call from someone claiming to be a CRA enforcement officer. He told her she owed $11,000 in back taxes and that a warrant had been issued for her arrest. He said the only way to stop it was to immediately withdraw $11,000 in cash and send it by money order to a specific address. She went to her bank the next morning, visibly distressed. The teller noticed her anxiety, calmly asked if she was all right, and she began to cry. The branch manager sat with her, explained gently that the CRA does not demand cash payments by phone, and contacted her daughter. A report was filed with the Canadian Anti-Fraud Centre at 1-888-495-8501. Every dollar of her money was protected. The banking compliance systems that can feel like an inconvenience when depositing legitimate savings are the same systems that protected this woman from losing a full month's pension income to a criminal. The rules of 2026 are not the enemy. In moments like that one, they are a guardian. What triggers a review? Under the 2026 rules based on official FINTRAC guidance and the new Bill C-12 framework, here is exactly what triggers automatic reporting or review. Any single cash transaction of $10,000 or more triggers an automatic large cash transaction report to FINTRAC within 15 calendar days. No exceptions, no discretion. 2 deposits of $5,500 on the same day equal $11,000 under FINTRAC's 24-hour aggregation rule and are reported automatically. A cash deposit that is dramatically inconsistent with your established account profile, for example, a $14,000 deposit on an account that receives a steady $1,668 monthly pension deposit, will trigger a review regardless of the dollar amount. Under new 2026 provisions, third-party cash deposits at bank branches may be refused and flagged. Repeated withdrawals of $9,500 or $9,800 at regular intervals will raise structuring concerns even if each individual amount is below the threshold. And banks must file a suspicious transaction report whenever there is a reasonable basis to suspect unusual activity, with fines now reaching $20 million per institutional violation. Compliance officers are reviewing and reporting more broadly than ever before. Your confirmed April 2026 benefit amounts. These are the amounts verified from Official Service Canada and Canada.ca sources, reflected in the April 28, 2026 payment. CPP was increased by 2.0% effective January 1, 2026, and those rates hold through December. The maximum CPP retirement pension for someone who started at age 65 with a full contribution history is $1,176.50 per month. The average CPP payment for new beneficiaries in the April to June 2026 quarter is $925.35 per month. If you started CPP before age 65, your amount is permanently reduced by 0.6% for every month before your 65th birthday. If you delayed past 65, it increases by 0.7% for every month you waited, up to a maximum 42% boost at age 70. OAS for the April to June 2026 quarter is $743.05 per month for seniors age 65 to 74 and $817.36 per month for seniors age 75 and older, reflecting the permanent 10% enhancement introduced in July 2022. OAS increased 0.1% for this quarter and 2.1% over the past 12 months. OAS never decreases. If the Consumer Price Index drops, your OAS stays exactly where it is. It only ever goes up or holds flat. The OAS clawback begins when net annual income exceeds $93,454 in 2026. For seniors age 65 to 74, OAS is fully eliminated if income exceeds 154 and 753s. For seniors 75 and over, the upper threshold is 160,696. GIS and allowance payments are non-taxable and excluded from the clawback calculation. The maximum monthly GIS for a single widowed or divorced senior for the April to June 2026 quarter is $1,185 per month. GIS is non-taxable. And critically, your GIS for July 2026 depends entirely on your 2025 tax return being filed by April 30th, 2026, even if you have no income to report. Even if you owe nothing, even if your only income is CPP, OAS, and GIS already reported to the CRA. Filing is still required every single year without exception to maintain your GIS eligibility. If you have not yet filed, do not wait until tomorrow. Call the CRA at 1-800-959-8281 or find a free community volunteer income tax program clinic at canada.ca. Your 8-step action plan. Step 1. Know and respect the $10,000 threshold. Any single cash transaction of $10,000 or more is automatically reported. 2 or more cash transactions totaling $10,000 within 24 hours are also reported. Understand these boundaries and plan your banking activity honestly, never with the intention of avoiding a report. Step 2. Never structure your transactions. Do not deliberately break up deposits or withdrawals to stay just under $10,000. Structuring is a criminal offense in Canada, regardless of whether the money itself is legitimate. Step 3. Keep a simple cash log. Starting today, get a notebook and write down every time you set aside cash, the date, the amount, and where it came from. A handwritten record creates a paper trail that can protect you enormously if your bank ever asks questions. Step 4. Organize your supporting documents before any large deposit. Whether it is accumulated savings, an inheritance, or proceeds from a sale, gather your supporting documents first. A will or estate letter for inherited money, a sale agreement for property or vehicle proceeds, or bank withdrawal records showing where the cash came from over time. Put everything in a folder before going to the bank. Step 5. Call your bank branch before any large cash deposit. Phone your bank or visit a financial advisor before depositing a large sum. Explain what you are planning to deposit, on what date, and where the money came from. Tell them you have documentation ready. This one phone call can prevent your account from being placed on hold and can reduce a review from 2 weeks to 2 or 3 days. Step 6. File your 2025 taxes by April 30th, 2026. This is urgent. Your July 2026 GIS depends on it. File even if you have no income. File even if you owe nothing. Call 1-800-959-8281 or find a free tax clinic at canada.ca. Step 7. Update your direct deposit information with Service Canada. If your bank account has changed in the past year, make sure Service Canada has your current banking details. Log into My Service Canada account at canada.ca or call 1-800-277-9914. A mismatch in your direct deposit information can delay your CPP, OAS, and GIS, especially during the July recalculation period. Step 8. Know how to protect yourself from elder financial fraud. If anyone, by phone, email, or in person, asks you to withdraw large amounts of cash, purchase gift cards, or send money electronically, stop immediately and contact someone you trust. Then call the Canadian Anti-Fraud Centre at 1-888-495-8501. The CRA will never demand cash payments. The RCMP will never demand gift cards. If anyone tells you otherwise, it is a scam. Why April 2026 is different. Bill C-12 became law just 1 month ago. Banks are actively upgrading their compliance systems right now. The penalties for institutional non-compliance have never been higher. The environment around cash in Canada has fundamentally shifted. At the same time, your benefits are at their highest dollar values in Canadian history. The people who protect their income are the ones who act before something goes wrong, not after. File your taxes before April 30th. Make one phone call to your bank if a large cash deposit is coming. Keep a simple notebook. Update your direct deposit. These steps take minutes and protect years of earned income. If you have questions about your specific situation, your CPP amount, your GIS eligibility, your cash banking strategy, or anything covered here. Write it in the comments. Every comment is read and responses are given. This community exists to ensure every Canadian senior has the clear, accurate information needed to protect every dollar they have earned and are entitled to receive. If this was useful, please share it with someone in your life who needs it. The difference between knowing these rules and not knowing them can be measured in thousands of dollars and weeks of unnecessary stress. Subscribe to stay current every time something important changes with CPP, OAS, GIS, Canadian banking rules, or any other program affecting your retirement income. When changes happen, you deserve to hear about them clearly, accurately, and without delay. Smart Pension Canada.